A lot of people with just 1,000 XRP are going to ride the price all the way up and then all the way back down because they get hooked on the excitement and they're scared to sell. Right now in April 2026, everyone's talking about huge ETF money pouring in and price targets like $25, but none of that matters if you don't have a clear plan to actually take some profits. Today I'm going to walk you through exactly why your small bag of 1,000 XRP can still be really powerful if you stop just holding and start thinking like a smart trader. Over the next parts, I'll lay out a simple step-by-step way to sell gradually. This plan helps you get your original money back, keep some tokens for the big upside, and avoid the trap that leaves most regular investors stuck with losses for years. You don't need a giant stack of crypto to change your life. You just need a solid strategy so you actually keep what you make when things get crazy. It's April 2026. Just last month, the SEC officially called XRP a digital commodity. Billions of dollars are flowing into the new ETFs every day. You've got your 1,000 tokens sitting there. It might feel tiny compared to what the big whales own, especially when you see people online bragging about their huge positions. But here's the real talk. Most of those whales will watch their money go up and then crash right back down because they never figure out when to get out. Most folks treat crypto like a roller coaster they can't step off. Imagine the price shoots up 500% in a bull run, then drops 90%. If you never sell, all that wealth on your screen just disappears when the market turns. If you're holding a smaller bag like 1,000 XRP, your biggest problem isn't big institutions or extra supply from Ripple. It's your own ego. You're secretly hoping those 1,000 tokens will somehow turn into retirement money. Meanwhile, the smart players are already moving and taking profits. The truth is, a person with 1,000 XRP who sells smartly at key levels, like a 78.6 Fibonacci point, can actually end up with more real cash in their pocket than someone with 10,000 XRP who waits too long for the absolute top and misses the chance. Discipline beats having a huge stack every single time the market flips red. Size doesn't matter if you have zero plan. Waiting around for a $100 XRP while the market is offering you a good exit at $10 is a fast way to stay broke. It's easy to get caught up in all the wild price predictions floating around right now. Some people swear we'll hit triple digits, but the charts show heavy resistance ahead. With the market cap sitting around $93 billion, jumping to $100 wouldn't just be a rally, it would basically mean XRP taking over a huge part of global finance. The big institutions buying into these ETFs aren't dreaming about diamond hands. They're looking for solid, calculated returns. If you look at the order books, there are billions of dollars worth of sell orders stacked up at levels like 144 and 176. Those aren't small hurdles. They're walls where big players can unload while regular folks are still posting rocket emojis and cheering. A lot of retail traders ignore these technical walls because greed takes over. They see the $1.5 billion ETF inflows and think it's a straight shot to the moon. But that smart money buys on dips and sells on the way up. If you're holding out for $50 while they're cashing out at $8, you're not really investing. You're just giving them their exit liquidity. The basic rule of markets is mean reversion. Every bubble in history eventually comes back down to earth, and the bigger the bubble, the harder the fall for the people who jumped in late. Human nature doesn't change. It happened in 2017, it happened in 2021. People held through what could have been life-changing money because they thought it would never end. By the time they realized the top was in, the price had already dropped halfway back. The 2026 bull run might feel a bit different because of all the institutional money, but the psychology is exactly the same. When regular news channels start talking about crypto nonstop, that's usually when the exit door starts closing. The times when everyone on social media is screaming to the moon are often right when the price is about to peak and then crash hard. You have to choose. Do you want to be right about some crazy price target? Or do you want to actually get rich? Being right means holding forever just to prove a point. Being rich means taking the money when the market gives it to you and walking away while others keep dreaming. The market doesn't care about your hopes or your timeline. It only cares about supply and demand. If you don't have specific prices where you're willing to sell, you've already set yourself up to lose. So be honest with yourself. What exact dollar amount would actually change your life right now? And would you have the guts to sell when the chart hits that number? Smart traders don't wait for the perfect top. They sell on the way up, in pieces. Most people mess up because they see their 1,000 XRP as one big block they have to sell all at once. That's a mistake. The first goal isn't to get super rich, it's to get safe. This is called initial capital recovery. Let's say you bought your XRP at $1. When the price hits $3 or $4, you're in a strong spot. If you sell just part of your bag at that point, you can pull out your original investment. Even if the price crashes to zero the next day, you haven't lost anything. Now you're playing with house money and the fear disappears. Once your initial money is safe, the whole game feels different. You stop stressing over every little price move because you've already won no matter what. After that, we use a trenches system. Instead of guessing the exact top, we set 3 clear exit zones based on Fibonacci levels for 2026. We split the rest of the bag, about 700 tokens, into 3 parts. EU's the 50%, 61.8%, and 78.6% Fibonacci extension levels, and set limit orders across them. This way you catch a good average price during the run instead of gambling everything on one peak. Finally, we keep just 10% as a true moon bag, in case the wild triple-digit dreams actually happen. That way you never feel bad about selling too early. But most of your position is already locked in safely. The biggest risk to your gains right now isn't the SEC anymore. It's actually Ripple's own stablecoin, RLUSD. While the XRP ledger is seeing record transaction volumes, a lot of that activity is happening with RLUSD instead of XRP. Banks like the speed of the ledger but don't want the wild price swings, so they're using the stable dollar version. This means XRP sometimes just gets used as a quick bridge for a few milliseconds instead of holding real demand that pushes the price up. Ripple as a company is doing great, bridging traditional finance and crypto, handling land records and more, but the token's main job might be shifting. There's also a huge hidden wall of regret. Almost 60% of XRP supply is still held by people who bought years ago at higher prices and have been underwater. The moment the price lets them break even, many of them will probably sell everything just to get out. That creates massive sell pressure that new buyers have to push through. Your own brain is wired to mess this up too. When the price climbs toward $10 or $15, FOMO kicks in hard. You'll hear stories about XRP being the future of everything, and the voice in your head will say, just wait one more day. The recent joint classification as a digital commodity by the SEC and CFTC on March 17, 2026 only makes that voice louder. To beat this, you can't trade on emotion. Set your limit orders ahead of time on a reliable exchange before the greed takes over. I spread my stuff across a few platforms for safety, and Kraken has been solid through every crash. When the trend finally turns, all those underwater holders will panic sell at the same time. If you haven't already taken profits, you could watch life-changing money disappear in hours. You have to be okay with leaving a little on the table if it means securing your own freedom. Success in 2026 isn't about being the smartest person online. It's about having a mechanical plan. A 1,000 XRP bag with a real strategy beats a 10,000 XRP bag with no exit plan. You don't need to predict the future perfectly. You just need to be more disciplined than everyone else. The institutions are here now, the rules are clearer, and liquidity is moving. The only question left is whether you're going to be someone who actually walks away with the money. Think about what your 1,000 XRP could mean at $5, $10, or $15. That could pay off debt, put a down payment on a house, or give your family real security. Those numbers on the screen aren't just a game. They can actually change your real life. Wealth isn't about chasing the highest candle. It's about having assets that can give you freedom, so you don't have to grind in a job you hate or sit in traffic every morning. The XRP ledger is growing fast with millions of transactions a day, but the price needs its own strategy. This cycle won't last forever. When the hype dies and the charts turn red, you want to be the one sitting on the sidelines with cash in the bank. Don't wait for the market to tell you it's over. Decide your exit prices now, set the orders, and walk away as a winner. And just stepping off script for a second here, reading through all that, I realized some parts might have sounded a bit too down on XRP, but that wasn't the main point. The whole idea is just to push people to actually have an exit strategy instead of hoping for crazy 3 or 4 digit prices this cycle. On the RLUSD thing, yeah, it does take some activity away, but it's not killing XRP's use case. The stablecoin actually helps keep everything inside Ripple's ecosystem. When people need to move between different currencies, like from dollars to euros, they still need XRP as the bridge, so it's more like the products work together. And on price targets, I'm not in the super bull camp saying $100 this year. I think we'll probably top out somewhere between $10 and $20 in this 2026 cycle. But longer term, by 2030 or beyond, 100 plus feels possible if everything Ripple is building actually takes off. Even higher prices further down the road aren't impossible if real-world liquidity moves onto the ledger. Market cap isn't some hard wall, it's just price times supply. What really matters is supply and demand. Anyway, the video is really about having a thoughtful plan so you don't just hold forever hoping for miracles, especially if your time horizon is short this cycle. If your plan is to hold until 2030, that's fine too. Just be realistic about what might happen in the next year or so and be ready to take some gains when they come.